Do you fear the Fed, and should you fear the Fed on a fundamental basis? And then the same, you get the noise with the options expiration. What do you think?
Well, fear the Fed, I think, I'm going to say respect the Fed. And I think the question is, the Fed, I think people are basically saying that the Fed is a bunch of wimps, that if there's the slightest bit of market turmoil, if there's a whiff of recession, they're going to back off their inflation call. I think that's a tough one to make right now. Markets reacted very positively to Powell's use of the word neutral at the press conference and really saw the market zoom upwards after that, despite the fact that pretty much every other Fed talking head has pushed back on that, and despite the fact that in the same sentence he said they were going to restrictive. So I think we have to respect the Fed until the market is, I think, anticipating that they're going to blink, and it's not clear to me that they are. And that's a tough place to be right now. Today's expiration is a little bit of a different story because I think there was a real hope that among certain traders that we would push through 4,300 on the open, where there was about $800 million worth of expiring options, and most of them were centered around the 4,300 level. The European numbers put a damper on that, and so I think today we're going to see a bit more lackluster expiration.
Yeah, 42.35 is where we're trading right now. We're definitely struggling on that front. Steve, from your vantage point, from the options market vantage point, the rally that we've seen in equities has been driven by what? A lot was made of the genesis of this rally being in the Powell pivots, fiction or not. Since then, though, it does seem as if the options market has had a big role to play in what has been happening here. Can you walk me through what we've seen and where it leaves us?
Sure, Guy. I think to a certain extent, people have really been dusting off the 2020, 2021 playbook to a large extent, and that included using call options as a speculative vehicle for a lot of individual traders and aggressive institutional accounts. They reach their frenzy when you get into meme stock craziness, but in general, I do think you've seen a lot of it. And last Friday's activity, where a lot of people were very excited about a 1.7% rise in SPX, that was, I think, largely option-driven because, you've all heard the phrase "don't short a dull tape." But I think that in a frenzied market, you can actually find people buying expiring SPY calls, dollar out of the money. Enough people do it, market goes higher, and rinse and repeat, and that's what you had Friday, and we've been working off that all week.
So after today with options expiration, does it continue on Monday?
I agree with the prior comments that I think we calmed down a bit until Jackson Hole, when really, all bets are off to a certain extent. We don't know what they're going to say. I'm a bit concerned about the pushback element that I mentioned, but I think the options market, it is late summer. We kind of go into a little hibernation, but then, September, people just always get a little freaky in September, whether it's back to school or whatever else. I think, this constant 20 level in VIX may be a buying opportunity in that regard if we get into sort of a freakish little bit of autumn.